All right. Hi, everybody. Welcome back to Quest for Alpha. Welcome to another weekly update. What we're going to do today, just like any other week, is we are going to take a look at our active trades, and we are going to also take a look at some of the trades that had previously achieved the first target and see how they have been progressing over the last week. If you're new to this channel, then just a very brief overview about myself and the strategy. I'm an engineer, I'm a father, and I'm a husband, so I really don't have too many hours to spend a day to look at the chart. So I developed a very, very simple method of looking at the chart, analyzing it, and making a pretty clear decision whether I can execute on trade or not. And then I follow that up with the trade management process that I have talked about on this channel. If we simply take a look at something that had already achieved the first target, for example, Equinox, I can give you an example how the strategy works. We start on the monthly time frame, which is the long-term time frame, and we want to make sure that we are in an uptrend. So this to me is an uptrend, clearly an uptrend. However, I do use an indicator. These are three EMAs, 10, 100, and 200 EMAs. I want to make sure that they're aligned on top of each other. And that's just another confirmation that we are still in an uptrend. Now, what I don't do is I don't enter blindly. I actually wait for the price to pull back. So just because I'm in an uptrend and I'm reaching new highs, that doesn't mean that I'm entering the trade. I really want the price to pull back, and I want it to pull back to a particular zone, which I call a demand zone. It's a place where price had shown evidence in the past that it wants to move away from, and to move away from in the upward direction in this case. So this happens to be this demand zone. That's the last bearish candle before we had very strong bullish candles, consecutive candles that have taken out the previous high. And then we wait for the price to pull back. Once the price pulls back here, we move over to the daily time frame and wait for a confirmation. Generally, the confirmation, and you can see that there was a losing trade here and a winning trade here. So this is a very good example. What I wait for is a consolidation of price to happen somewhere where all of the EMAs are close together. But in general, closer to the top EMA. In this case, it was the 200 EMA. And then I wait for price to always close above the consolidation, and the price must be above the top EMA, in this case, the 200 EMA. So this was one of the candles where the price had closed above. Now this is a bearish candle. I entered, but this is not something that I typically do. So you can call it a mistake regardless. It cost me some money. And then the price collapsed here. It was still in the zone. It came back up. There was this consolidation here. Then there was this candle that broke above that consolidation, but really barely broke. Then the next candle nicely closed, not only above the consolidation, but above the 3 EMAs. And then the very next day, I ended up entering the trade, placing the stop loss below the consolidation and targeting at least 2 to 1. My trade management is generally in the following way. I don't strictly exit if the price comes below the stop loss. I wait for the price action to tell me whether it wants to move down or if it has any possibility of turning back up. In that case, with Equinox, we didn't need to worry about that because the price just dipped slightly in the negative and then went up. Once the price reaches 2 to 1, I exit 50% of my position and I let the rest run. And that's it, really. Simple approach. Two filters approach is what I call it. On the longer time frame, I'm looking for an uptrend. Then I wait for a price to come back to a demand zone. And then I am looking for a confirmation on the daily time frame to enter a trade. Okay, so let's take a look at how did the active trades performed. So Novo Nordisk, this is one example I've talked in the previous weeks. The reason are the reasons why I entered this trade to begin with and why I still haven't exited are covered in previous trades, but this is one of those trades that I'm not looking at monthly and daily. I'm actually following it at 3 months and weekly. So it's a little bit longer time frame. And over here, I'm still at play. Now, this was not the best confirmation, but I do believe on a fundamental level that Novo Nordisk is going to continue to move up. It may very well collapse and it may come to this demand zone before it decides to move higher. So this is a very long-term investment as opposed to like a shorter time trade. The next one on the list is Meta. Meta didn't have perhaps the best setup that I expected. I had entered here, it came down, and I did not exit. You see, I have this flexible stop loss methodology that I follow. In my case, this is the consolidation that happened below the stop loss because on Friday, the price decided to go above that consolidation. That to me is an indication that the price wants to continue to move up. If, for example, price next week comes somewhere down, I most probably are going to exit this trade. RSG is another trade that's in the negative right now, but it's doing okay. And you can see because I have this flexible stop loss requirement, simply the price coming below this level did not make me close my trade. I remained involved and I'm still in it. MDLZ, this is something that, again, it did not get me to exit the trade. It barely reached below the stop loss. It is still here. We are going to see what's going to transpire next week. It's unfortunate, it is in the negative, but it is still a live trade for me. And RMD is the one that's doing pretty well. I have decided to enter here. I'm already at 1-to-1 risk to reward at this point. And this was a trade that I decided to enter right over here. The entry would have been here, but I never really saw this trade. I never really looked at it. I came at it pretty late when the price was somewhere over here, and I was waiting to see signs that it may want to go higher. So I'm happy I entered this trade. It was a low risk trade. From the trades that achieved the first target, Equinox. Equinox is still doing well. It's above the 2-to-1 target. Yes, it dipped from where my exit was, but it's still in profit. Lin continues to move higher, so it had a very, very strong week. Ingersoll Rand was just ranging. CPay, where were we on Friday? Okay, so Friday we're here. We have moved up this week, so this was a well-performing stock. CTVA, also a good performing stock for this week. Dover, well, Dover actually barely moved up. It's been ranging over here, but you can see that we are already at a 4-to-1 risk to reward. So very well performing stock thus far. Merck has also been ranging here, but still way above the 2-to-1 risk to reward. So still in profit. Regeneron is one that dipped a little bit, but not a significant dip. VRTX, where were we? We're here on Friday. So this one actually dropped a little bit. Again, not a significant drop. We're still in profit. ALSN continued to move higher, and FCNCA, it had moved a little bit higher than last week. So I have not found any new setups at the time I'm recording this video, which is actually Friday the 20th. I'm already in these trades, and some of these trades that have already achieved the first target. I'm invested in many of these stocks. Unless I close some of them, I don't really plan on entering into new trades. But if I do see a nice setup, then I'll most probably share it with everybody. Okay, so with that, I'd like to thank you all for your attention and looking forward to next week. Bye.